I do is make money, I don't do shit else. Wake up, count racks, and I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't by the bag, I don't pick up this cell. Stack it up, flip it quick, I've been living too well. Walking, drip loud, whole fit disrespectful. Talking about money, little boy, that's my schedule. I don't got time for no broke ass lecture. You counting opinions, I'm counting extra. New chain coat, make your neck feel jealous. I don't say please, I just say send it. Make account look like a goddamn fetish. Everyday payday, I meant that I said it. You flex online, that shit look pretending. I just hit deposit, that shit never ending. You worry about me, I ain't worried about nothing. I spent your rent on some dumb shit for fun, yeah. All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well. Hey, petty as fuck, yeah, I'm flexing on purpose. Bought the same chain twice just to make them feel worthless. You saving receipts, I'm just buying for fun. You waiting on checks, I got 10 of them coming. Bitch said she loved me, I told her I doubt it. You love how I spin, yeah, don't talk around it. I'm lit every day, I ain't asked for permission. I'm breaking the bank and I'm making new digits. Too many commas, I'm losing account. You making excuses, I'm making it count. I walk in the room and it's quiet as hell, cause everybody know I've been ringing the bell. Money on my mind, I don't sleep right. If it ain't a bag, it don't feel right. You broken, you loud, that don't seem right. I'm rich and I'm rude, yeah, that's me, right? All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together, I guess we are putting together pretty degenerate, chaotic, whipsy trading action. I'm going to be honest with you. I've already been trading a little bit this morning, and it has not been going well. I had 2 losses, but unfortunately, they were reasonable losses that got out of hand because of like the slippage, like just kind of a lower liquidity environment. Seemingly a lot of random large market orders hitting, and all of a sudden we're skipping 10, 15 points on NQ like it's nothing. So we're already starting from behind on this beautiful Tuesday. So let's see if we can make it a true turnaround Tuesday and get myself out of this hole. From here on out, I guess we're going to have to do a little bit more of defensive trading until I'm at least where I need to be. The losses aren't that bad. It's just like I feel like I took reasonable shots. It just so happens that the random movement in the market were pops against me instead of drops in my favor. So it's going to happen. Not that big. Matt is a little behind. You're a little behind, Egg. So here's the plan. I'm going to be breaking down all the craziness between, I guess, Trump's speech yesterday, which we all watched together, all the way until this moment. And then I want to prep you up for not only what to pay attention to in terms of the news, but also, I suppose, the news, the market today. We already had some updates at 8:30. It's a little bit of individual equity stuff, but there's just a lot going on. There is quite a lot going on. What are my thoughts on what's going on in Iran? My thoughts are that it's causing a lot of chaos chaos in the market. And if you're on the right side of that chaos, you can make a lot of money. If you're on the wrong side, you could lose a lot of money. But the tough thing is figuring out what side is the right side, because seemingly every single day we're either ripping or we're completely crashing. In the overnight session, things got pretty red. They got beat up. We're bouncing back a little bit right now. I'm sure at some point throughout the day, we're going to be getting major updates. Those updates could be massively bullish. It could also be massively bearish. So before we really get into anything, I guess just that friendly neighborhood reminder, size down. When things go a little bit in your favor, however you want to define that, get your stop to break even. This is a day where you want to minimize your risk and, when possible, take all risk off the table. Hopefully, you're on the right side. Maybe you're a little bit lucky and it keeps trending in your favor. But just in case it doesn't, just in case you're looking really good and there's an update that's completely against you, you want to protect yourself. The name of the game every single day in trading is protect your downside. It is always risk management, and there's going to be a special magnifying glass on that entire concept in sessions such as this, because there's a lot more chaos, there's a lot more volatility, there's a lot less stability, and there's a lot larger movement. So yes, that can be good if you're on the right side, but it also could be actually account ending if you're on the wrong side. So please keep that in mind. I beg of you to keep that in mind today. And maybe, just maybe, we can actually get on the right side of all of this. Very quickly before we get rocking today, shout out to Apex, up to 90% off. Yes, you heard me right, 90% off if you use that code Goonie. Today, with the movements that we're already seeing, you can so comically easy pass these evals today. Yeah, it's going to take a little bit of luck to get on the right side, but with the amount of movement we're getting, you can so easily pass these evals. So if you want to take advantage of it, code Goonie. This is going to last for 2 more days, 3 more trading sessions. I just wanted to bring it up to you today because not only is it a phenomenal deal of 90% off, yes, 90% off, but just based on what we're going to be seeing in the market, I mean, there's a chance that if you pick the right direction right at market open, that you could easily pass your test. So I just want to call that out to all of you. And with that being said, here's a little looky-see at the market right now. We were looking good around 5 in the morning, and then everything changed by 6:45. I tried to play this breakdown, and then the market completely went against me. I thought we were going to keep going, and apparently I was dead wrong, but more on that in a second. Let me get rid of this. Dow futures drop 100 points as ceasefire hopes fade ahead of Trump's Iran deadline, which once again, I think it's going to change, but based on the most recent updates, the deadline was initially set for tonight, Tuesday, 8 p.m. Eastern. That's when we're going to be attacking more of their infrastructure. At least that's what we were told is going to be happening. If you ask me, I think this is going to be one of those things where Trump kind of tacos out. I think he's going to get close to the deadline. He's like, guess what, guys? I'm moving it because we're making great progress. So that's all I really wanted anyway. But once again, that's just my anticipation. Is that actually going to happen? I have no idea. For all I know, he might be like, nope, they didn't listen, and we start throwing missiles even more. So time will tell. Iran keeps up attacks before U.S. deadline, dimming peace chances. So if you were a betting person, which the fact that you're here, many of you are, the odds of getting to this ceasefire today are slim to none. As they like to say, a snowball's chance in hell. Hope fades for deal with Iran ahead of Tuesday night deadline. Trump has said the U.S. would bomb bridges and power plants if Tehran didn't reopen the strait. So I don't think they are, because we're already getting some pretty crazy updates. Breaking: negotiators are quote unquote pessimistic. Iran will bend to meet President Trump's demand to reopen the strait before his Tuesday night deadline. This is paving the way for the U.S. to target Iranian bridges and power plants in a fresh escalation of war. Trump's deadline is now less than 21 hours away, and that was posted actually last night at 11:30, so it's even less. Once again, it is 8 p.m. tonight, so we have, 11 hours, if I'm doing my math properly? 11 hours left, folks. So yes, there's good reason for the negotiators to be pessimistic. Breaking: Iran has delivered its highly anticipated 10-point response to the U.S. 15-point peace plan. Iran's 10-point plan includes, and I'm going to get into this, but I just want to offer a little bit of framework here. Remember, we hit them with the 15 points. They said, nope, this is not acceptable. And then they came back and said, hey, actually, if you want us to stop, you're going to have to listen to this. And apparently they want guarantee that Iran will not be attacked again, permanent end to the war, not just a ceasefire, end to Israeli strikes in Lebanon, lifting of U.S. sanctions on Iran, end to all regional fighting against Iranian allies. In return, Iran would reopen the strait. Iran would impose a fee of $2 million per ship. It would be splitting those fees with Oman, which borders it on the southern side. Iran is on the northern side of the strait. Iran to provide rules of safe passage through the strait. Iran to use the strait fees to reconstruct instead of reparations. President Trump's deadline for the peace deal. All right, once again, we know that it is 8 p.m. tonight. Trump says Iran's ceasefire proposal significant but not good enough as the strait deadline nears. So obviously we received it. And Trump saying, all right, we're making some sort of progress, but apparently not. Breaking, President Trump might delay his Tuesday 8 p.m. deadline on Iran if he sees a deal in the coming together. So right away, are you already kind of seeing the whole taco thing? Like, maybe I'm seeing something that's not there. Maybe my tinfoil hat's on a little bit too tight. Maybe I just am recalling all the taco-ness that we saw from the trade war roughly a year ago. But I'm personally seeing a lot of similarities, a lot of correlations. I'm basically already seeing a pretty clear setup that as we get close, and it's going to come in like the 11th hour, aka the 11th hour right before 8 p.m., is going to be like, you know what, guys? We're making some really good progress. I'm going to give them a week or something like that. So, of course, I'm not by any means guaranteeing that. Maybe this is the time. Maybe this is the straw that broke the camel's back. And he's like, you know what? Instead of tacoing out, I'm going to hit the big red button and we're going to blow them up even more. Maybe that's totally possible, but I don't think it's necessarily the most likely. Trump floats seizing Iran oil as he weighs Chinese leverage play. So not only do we have Venezuelan oil, we might be having Iranian oil soon. Oil prices rise as Trump reaffirms deadline for bombarding Iran's power plants and bridges, which is shooting oil higher and higher. Not so long ago, we were at 65 a barrel. We are now at 150. Almost taking out the high from when this whole escapade started. So oil is up and away, and volatility's up, equities are going down. The overall situation is not looking pretty. Trump-Iran option strike most likely. Okay, so this is from Bloomberg Economics, and they outline the 4 possible outcomes. And once again, none of these are guaranteed, but they are giving some sort of probability. Ceasefire. Low chance. The U.S. and Iran remain far apart on terms, so probably not going to happen. Delay, medium. I think this is the most likely. Trump could push back the deadline again, though he signaled reluctance. He's always signaled reluctance, and then he does it anyway, but the way he speaks about it is he still chalks it up as a win. Airstrikes, high. The most likely path ranging from limited to broader attacks. So once again, this the market just randomly dropped 30 points and then bounce right back. Dude, this is going to be a crazy day. So according to Bloomberg Economics, not Matt Kohrs, the airstrikes are most likely. And then once again, a low chance, major escalation, ground troops or targeting key sites like the island would be risky. Bottom line, limited military strikes are seen as the most probable next step. And that was as of 7:15 this morning. So my question to all of you, out of these 4, ceasefire, delay, airstrikes, major escalation, out of those 4, which do you think is going to happen? I'm not asking you likely, unlikely, like right now in your gut, which one do you think is most likely? Most likely. And actually, as you are guys, I'm reading the chat right now. So as you guys are typing that in, you should also know Iran's Revolutionary Guard basically says if the U.S. cross red lines, the response will be beyond the region. So that's not so good. Kind of leaning a little bit into the major escalation. Blast heard on the island, according to local media. So we're already bombing it. U.S. conducted strikes on military targets on the island. So that already happened once again as of 7:30 this morning. So I just want to let you guys know as of the information, and to literally no one's surprised, the U.S. and Iran have both rejected the peace plan proposed by mediators. That was also as of 7:30 this morning. I'm giving you the time frame because this is changing from minute to minute to minute. Major escalation, airstrikes, gonna go boom. Gut feeling is escalation. Taco, airstrikes, boom. Trump going to delay, tacos, strikes are incoming. Okay, so you guys are pretty split between tacoing out, aka delaying it, and then airstrikes. Not many of you are saying ceasefire, and not many of you are saying major escalation. Once again, it seems like chat is majorly in between the taco delay and then airstrikes. Interesting. Well, time will tell. I'm hopeful for a ceasefire, but I don't think it's likely. With respect to other major macro developments, we did get the durable goods drop today. They expected a drop of 1.1. It came in as a drop of 1.4. That's pretty much the only other thing scheduled on the day. We're not in earnings season. Just so you know, Delta is reporting tomorrow morning. Just wanted to call that out. We do have some movement in the world of AI. Broadcom shares jump before the bell as chipmaker agrees Google and Anthropic deals. Broadcom stock has endured a tough start to 2025. So is the entire market. But shares are up this morning as it would continue to produce AI chips for Google. So that's pretty cool for Avago, AVGO. ASML shares fall after proposed U.S. export curbs target an already fragile China market. So this is kind of is similar news to Nvidia, where every so often it takes a big hit because maybe they're not going to be able to sell to China. Startup bets AI can replace Wall Street analysts. Anthony Pompliano, crypto influencer and entrepreneur, is launching a business focus on AI generated research notes. I actually fully agree that this is going to happen. What's better than an analyst is the fact that you can get, instead of a meat-based analyst, you can get a robot, water, or a metal, a wire back, if you will, if you want to be derogatory. Well, that's going to work 24/7. Learn on its mistakes, never is going to argue for sick time, never going to argue for a pay raise or anything like that. I think the AI is the future of so many things, not only for Wall Street analysts, but I actually think trading. Trading is already mainly dominated by robots, and we don't quite see that yet really in the world of retail, but based on some recent developments, especially shout out to Public, that is now offering agentic tools to retail traders. I think 2 to 3 years from now, it's going to look so wildly different. I really do. My little hot tip to all of you is basically hop on the ship as early as you can, because you definitely do not want to miss it. If you haven't already, sign up for the newsletter. It is 100% free. It's in the description of the video. My mod will put it in chat. You don't need to put in a coupon code or anything like that. Just drop in your email and you are in. 100% free. It's always been free, always will be free. Every single Sunday to your email inbox, I break down what's going on in the market. Cheat sheet for all the earnings. This is section's a little light right now because we're not in earnings season. A little cheat sheet for all the major macroeconomic updates. Tomorrow is going to be a big day. Crude oil inventories, 10-year note auction and FOMC meeting, and then also seasonality. Today, Tuesday, is dominated by the bears. Not much, but it is more so leaning bearish, especially in the past couple of years. So it's not the most impressive seasonality day we've ever seen, but yes, historically, it's a 50-50 day, but when the Bears win it, they win it with greater size. Will that be right this time around? I have no idea. I just want to give you the stats of the situation. Once again, this is all for free. Just sign up for the newsletter. Wednesday, oh, that's definitely leaning bullish. That shouldn't be bearish. That's a typo. Hang on, let me fix that. That must have been a leftover from last week. That is not right here. Leaning bullish. All right, updating that. And then just so you know, for Thursday, a bit more neutral. And then Friday is also leaning bullish. It's not straight up bullish. I don't know what the fuck happened there. Anyway, quick fix there. But if you want to sign up, like I said, it's free. You don't have to pay for anything. You've never had to pay for anything. Just want to call that out. All right, that brings us to the market for today. If the market were to open right now, we would be opening at 6584, which means that there is no gap from today's open. But there is still a gap in the S&P 500 all the way back to Tuesday, March the 17th, there's an upside gap fill at 6711. You might want to mark that out. You might want to put that on your chart. It's roughly the 50 EMA for the daily chart. Obviously, we're not that close to it. And based on the pre-market action, I don't know if it's necessarily likely today because you have Bitcoin going down. You have volatility going up, you have oil going up, you have SPY going down, and you have QQQ going down. So is it likely? No. Can it happen? Yeah, I guess. I mean, if they say, yeah, we ended the war with Iran and we won and blah, 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 and they accepted it, and they come out and say, yeah, we accepted it, we could have a record-breaking day. So is it impossible? No, it's not impossible. It's just not likely. So from the daily chart perspective, obviously we are still making lower highs and lower lows. The trend and momentum is clearly bearish. There is an upside gap fill, and based on where we're opening right now, this might just be another lower high, and we might be setting up for a puke down to basically 6,480, but obviously time will tell. So that's a look at the daily chart. With respect to intraday movement, these are all the key levels I'm looking at. Once again, if we were to open right now, we would be roughly where my cursor is 6585. And you can see that here on Spot Gamma. Now it's 6586. So a couple things are going to jump at you. I probably should have started on this. The first thing that you should notice is there is an iron condor in play. The call credit spread is at 6,600 and the put credit spread is at 6,520. I don't necessarily think this is the same player. I think a player put on the call credit spread and a different entity put on the put credit spread, because if you look at the call credit spread, it's spread by 5 points, 6,000 by 6,005. Well, the put credit spread is actually spread by 10 points. It's sold at 6,520 and it's bought at 6,510. So structurally, it is creating an iron condor. I just don't think it happens to be the same player. So anyway, in terms of things to mark out on your chart, yes, the call credit spread at 6,600, that is resistance. You have the put credit spread at 6,520, that's going to be support. And then there's also a bit of support at 6,560, at least as of market open. This thing can obviously change. Stability is low, it's at 6%. Generically, you have quite a bit of positive gamma above, starting above 6,620, and you have a decent amount of negative gamma below, which means if we start to sell, we can really sell. And then there is a large put wall at 6,500, which would be an 86 point drop. Can that happen today? It can definitely happen today, especially based on some of the shit that is going on right now. So overall, these are the major levels. Remember, the call credit spread, 6,600, and then the put credit spread, I actually don't even want 30 on the chart. That's just going to confuse me. 6,520. So definitely mark out this one, and then the other ones I have on the chart are just other large plays from large players, as in there's a lot of money at that particular strike on the 0DT, as in it could come into play today. Other than that, I always mark out the previous high, low, and close. That is the red, the green, and the white line. Just important technical, pivotal, psychological levels. And then the final thing is this white box, which is the transition zone, bullish above, bearish below, choppy within from the perspective of market makers. So just wanted to call all that out. Like I said here, I'll make it bigger. If you want to write these down, if you want to screenshot them, if you want to use them, have at it. If you don't, okay, cool. I'm just letting you know these are my levels. Obviously, the bull case would be the levels to the upside and the bear case would be the levels to the downside. I find it very, very important to come into the day with absolutely no bias. I don't think you should be coming in saying, I'm only looking for longs, I'm only looking for shorts. You have to just let the market tell you which way it's actually trending and then attempt to just play that trend to the best of your ability. Don't come in with a bias. This is going to be chop suey today, so please be careful. All right, let me set up an alert on this, exiting rectangle. It's always good to know where the pre-market, or I should say overnight trading session high and low are. That is a very common target for regular trading hours. So if we break down, you might want to be paying attention to 24,135. If we break out, you might be looking at 24,422. So watching that high from 5:30, watching that low from 8 a.m. So please pay attention to all of that. These are the levels. There's the levels. With respect to momentum, 5-minute is testing, 10-minute is testing, 30-minute is testing, 4-hour is bullish. With respect to the levels on NQ, 5-minute is testing, bearish to bullish, 10-minute is bearish, 30-minute is bearish, 4-hour is bullish. So let's see how things really get going out of the gate, because it might be not so simple. In fact, I don't think today is going to be a simple day by any means, if I really, really had to guess. All right. And before we really get going, we have 5 minutes to go, and I'm going to turn it over to you folks for questions. Why is that not working? Here we go. I took 2 losing trades today, and on top of that, all of them, just crazy slippage trying to get out at 17, got to fill at 32. So the liquidity wasn't there. The market was really, really jumping on me today. So like I said, I had 2 losing trades, and when it skips your actual exit because there just wasn't liquidity there, I am starting off today And unfortunately, I'm starting off on my heels. Now, this isn't the worst. Some of these are 1,200. Some of these are 1,500. Like, I can definitely get out of this hole. I've done it before. It's just not the best start to the day that I've ever had. So I just want to be transparent. I was trading in pre-market. I was trying to ride the trend, and then random news would break, and I would get a 10 to 15 point slippage. And when you're trading multiple contracts, because I was trying to be cute and lock in like a 10-pointer and then have a runner, not the best. So anyway, I've been here before. One good trade can not only get me out of this hole, it can actually make me green. So some of these I have quite a bit of buffer to deal with. Like I said, it sucks. I'm not stoked that I'm down, but I've definitely been in worse situations and still ended green. So I'm going to be a little bit more conservative today, not only because of the state of my accounts, but also because of just the nature of what I expect today's trading session to be. So just want to let you guys know that this is where I'm dealing with. I'm already down by 75 points. So the name of the game is, can we get 75 points back? All right, let me get back to this. If you learn ICT suspension propulsion Zycron model, do you mean unicorn model? Yeah, that sounds awesome, dude. If only we knew that. If only we knew that, we'd be making money on every single trade ever, because it is the best trading system ever. The funny thing about ICT traders is they're so confident they're right, and then yet none of them are profitable. Like, they all just go around on the internet, basically in a giant internet Twitter circle jerk about how great it is, and then yet none of them are making money. You can count on one hand the amount of profitable ICT traders. Matt, when you trade SPX long or short, do you do it in lots? Can you explain that? And with someone without a funded account, what do you recommend? I don't really understand the question. So SPX is the actual index. If I trade that, I'm trading options on it. But there is a contract on the futures market it's another derivatives market. The way the options market is another derivatives market, the futures market is another type of trading. It's another market. You have equities, you have futures, you have options, you have crypto. Like, those are all independent markets. So on the futures market, there is a contract for the S&P 500. There is a contract for the NASDAQ. I think that is like kind of what you're asking. I don't really get the question though. SPX is the index. SPY is the ETF tracking SPX. ES is the futures contract tracking SPX. So they're all measuring the same thing, just in different markets. SPY is the ETF. ES is the futures contract. You could actually trade options on both SPX, ES, and SPY. They all have options markets associated with them. They're all just different markets. And with someone without a funded account, what do you recommend? Based on the question, I would say start with paper trading and try to figure all this stuff out. There's no point in you risking real money until you have all of those types of questions answered, and then some. So for anyone starting, or maybe like, I don't really get this futures thing, my biggest recommendation is, when you start, don't risk anything. Like, literally just use a paper trading account. No real risk, no real reward. And it allows you to figure out some of the mechanics of what's going on with no actual financial risk to yourself. All right, the market is about to get going on the day. So in the final 30-second warning, how are you feeling? Bullish or bearish on the day? If you had to buy at open or sell at open and then close it out at 4 p.m., from market open to market close, do you think we're going to be up, or do you think you're going to be down? What about the long-term investment? Is better to buy SPY or the actual S&P 500? It's only going to be a slight taxable difference, but it's going to be, the performance of it is going to be the same thing because they're measuring the same thing. But based on your personal situation, there might be tax implications of if SPX or SPY is better. Bullish first 15 minutes, bear, bull open, bear. All right, well, we're about to find out. Dingity, ding, ding, ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Well, whoever said bullish at open, the first wick was definitely the right one. It's gonna be a crazy day. All right, let me get the options flow up because I know a lot of you like to check the options flow. Here's Hero. Nope. Don't look at my fantasy bracket. It was horrible. Congrats to everyone who was supporting Michigan, by the way. I had Arizona winning the whole thing, so that didn't work out. But shout out to everyone who picked Michigan or who was just generically supporting Michigan. All right. Remember, shout out to Apex, 90% off. This is the best deal that they run. 90% off, code Goonie. Look at the movement in the market already today. You really don't need that much to actually pass these tests. There's certain environments when the volatility is just not there, but literally at market open, if you went long, you would have already passed tests. If you went short there, you would this is enough movement to very easily pass the evals. To be completely honest, when I'm trading the evals, I am personally a little bit more degenerate. I'll take on a bit more risk because I care more about the timing than the financial efficiency. I care more about the time efficiency. So environments like this, when we are ripping in all directions, yeah, maybe 50-50 you're right up there, maybe 50-50 you're right to play it down. Obviously, you have to be somewhat on the right side of the direction, but these movements, it is so easy to pass these evals because we're just moving so much so quickly. And when that happens to be the environment with a 90% off deal, shout out to Apex. Like I said, pinned to the top of chat in the description of the video, or just go to Apex and use that code Goonie. And also, just so you know, if you want to trade with me, mentor from me, trade in a cool community, the Goonie Trading Discord is open, GoonieTrading.com. So that's also pinned to the top of chat and in the description of the video if you care. All right, market popped, dropped, and now popping again. The Qs hit the low from yesterday, and the SPY is not that far away. As of right now, I'm seeing a little mini C of red. Google is green, and that's about it, probably because of the deals that were announced this morning with Anthropic. But even Bitcoin's losing it a little bit right there. Where are we at? All right. Let's hunker in here and see if we can make some quality decisions. The white line is the VWAP from the 6 p.m. the night before, the whole session VWAP, while the orange one is regular trading hours VWAP, the New York VWAP. I don't think that's not really that bad of risk. But this is what happened yesterday. And it's what happened on Thursday of last week, where it was trending down. I saw the lower high. I took the short. And then not only did it come up to test VWAP, it actually broke above VWAP. So I'm going to give it a second, especially because we're only 3 minutes into the day. I'm already playing catch up a little bit. So I don't need to be doing anything too crazy right now. Or for all I know, maybe this is a full-on legit market vomit today, and it just gets absolutely ugly. Yeah, we are pushing that low. Bitcoin, maybe. I'm watching VWAP. There's two VWAPs. It seems like the area between 50 and 60 is pretty freaking important with respect to equilibrium. Seems like it's pretty freaking important. From a momentum perspective, the 1 minute is bearish. The 5 minute try to go bullish, got smacked. 10 minute try to go bullish, got smacked. And then let's take a quick look at the 30 minute. The 30 minute try to go bullish, got smacked. The 30 minute try to go bullish, got smacked. So it was the shorter time frames were trying to get going on that opening push. It just did not last long. It just did not last long. Okay, one contract. My trade copier is on. Okay. We're going to see how this goes, folks. Kanye got banned from the UK. I didn't know. Oh, no. Kanye banned from the UK. Didn't know Kanye was in the running to get banned from the UK, but I guess it happens to the best of us. I guess it can happen to the best of us. Oh, brother. Do I want to take a stab at it early this morning? What's flow looking like? SPY did just dump there. Mag 7. But is it a fake out? All these dirty, rotten fake outs. All these good for nothing, rotten fake outs, man. Oh, we're going to take a stab at it. I specifically did want my fill. I didn't want to wait. Well, this is what I get for not waiting. I didn't want to have the short. Oh, I got to get VWAP. This is what happened to me on Thursday of last week. And I went short another one. And when it started to break, I refused to admit I was wrong. So I just need to remember that someone came in, son of a bitch. I'm not going to do what I did on Thursday. We're going to be smarter than that. We're going to be smarter than that. Let's see. Let's see. We're not going to do it. All right. We're not making the same mistake twice. You know, fool me once. Buyers coming in at 200. Will they hold it? Will they hold it? The delta was getting beat up. And then, of course, the second I get in a trade, it rips, which is just my luck thus far on the day. It's just my luck on the day. All right, we're getting the stop in. Ah, dude, this is not where I want to be in the session. Yeah, I had to. I can't make the same mistake. Are these trading on a different? They are trading on a different copier. Why are these ones still going? Do I need to cut them? As like painful as that is, like it got a wick out, and knowing my luck, that's going to be the top, and it's going to crack under 31, and I'm going to be forced back into the trade. Yep, I had to do it just because I didn't do it last week, and it cost me a lot. So like it is from a risk reward perspective, it sucks. I got literally topped out, but 'tis trading. 'Tis trading. Woulda, coulda, shoulda. Woulda, coulda, shoulda. We're right at VWAP here. Mag 7. Yeah, it started to pop a little bit. Yeah, even S&P. That was on those other accounts. Evals I'm being a little bit more degenerate on. Okay. Do I want this trade? All right, put the stop in. This low is 1. So I'm looking for a crack of the intraday low. Dude, that sucks. Literally top ticked out. Like, come on. I would have already... Well, no, I would have taken this. I would have been back to break even, and instead, yeah, that's trading. Sometimes you get a crazy lucky, and I've streamed that to you, and sometimes you get crazy unlucky, and I've streamed that. Well, I literally just streamed that to you. It is, you live by the sword, you die by the sword, folks. All right. We're pressing this trend line a little bit. Let's watch this new one. So we have a double bottom here at 200. We saw it at 915. We saw it just now. This low is, let's mark out some of these lows. So I can more rapidly react to it. On the puke below 196, if it were to happen, I don't know if it will. If it were to happen, that's when I move my stop to break even and take all risk off the table. Which is a big fucking if at this point. Come on. I'm watching this VWAP 38, 53, and 59, but I need this to fail rather quickly. I need it. Buyers keep stepping in at 200 for now. I don't know if that buying will persist, but it just keeps bouncing off. I could move my risk to this one to 33, maybe 39. That would help de-risk. I could always go 1 and 1. I don't have to move 2 at a time. What is the overnight low here? What is the overnight low? What is this one? 133. Okay, so my first target would be 140. What is this one? 140. Okay, you know what? Let's not be greedy about it. All right, if there's a random puke, see how it keeps bouncing off of 200? It just it keeps coming here. If there is a random puke, I'm trying to front run 150. I think it's reasonable if you wanted to target the actual low, which is what, 133. I'm just imagining what if there's a random puke and there's a lot of buyers at 150. At least I got to fill on one of my 2 contracts at 151. I can move the stop to break even, and then maybe I get lucky with the 133. Is kind of the thought behind that. But that's, as of now, visions of grandeur, because it just keeps bouncing at 200, which is not making me feel good whatsoever. It just, buyers keep stepping in at 200. The question is, how much more firepower do they have? How much more firepower do they have? Time will tell. Time will tell. Patience, patience, patience. All right. That was an intraday low, and then people came in and started buying it right at that key level. Well, we'll see. I am on the right side of momentum, as a trend following trader. For right now, 5 minute, 10 minute, 30 minute is all bearish. 5 minute, 10 minute, 30 minute is all bearish. It could obviously switch in the next minute. I'm just saying in real time, just sanity checking the current position. 5 minute, 10 minute, 30 minutes all bearish. 5 minute, 10 minute, 30 minutes all bearish. Options flow is more down than it is up. Options is flat on the mag 7. So is it an A+ setup? No. I'm just hoping it doesn't do one of these things where it retests VWAP, knocks me out, and then pukes anyway. It's already done to me twice today. Come on. Come on. All right, so we just tagged this VWAP, perfectly tagged the regular trading hours VWAP. Obviously, if we go below 200, I could use that, and maybe I should use that with one of my contracts. Obviously, when you're trading multiple, you can do your risk and your reward separately, the scaling in, scaling out. Oh, come on. I'm really looking. As long as we can, this region between 34 and 58, if we can stay below that, I have a legitimate fighting chance. I just really needed to crack 200. And remember, I'm short 2 right here, short 2 at 222.75. I'm trying to unload 1 at 51 just in case people start to buy at 50. But in reality, if you're just being a pure technical trader, you would be targeting the overnight low at whatever this is, 133 flat. So I'm actually front running it by 18 points. So, but that's because, once again, I'm playing kind of from my heels and I'm trying to get the fuck out of the position that I'm in, as in already being down on the day by a decent amount. Do I do 146? All right, I need to figure out the risk management because it just keeps coming back to 200. We flushed. We just made another fresh low. I don't have to worry about the 10 a.m. reversal, at least quite yet. I'm trying to be patient, but I'm also trying to be mindful of the current state of my accounts and the fact that they are in the red, and I'm trying to get them the fuck out of the red. Come on. Come on. Crack 80 here. You can do it. You can do it. As this drifts, hopefully VWAP is actually going below my average fill, because then if it does bounce up to and gets rejected, at least I won't have to take the heat of it. I like this little rejection here at 200. Before it was support, 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 rejection, rejection, rejection. I would just feel so much better if I can unload one of these. I mean, that would cut my loss in more than half, and then I would obviously have the other one. I'd be feeling good. I'd be feeling good. Come on. Don't recapture 200. Don't recapture 200. All right, we're 15 minutes into the day. Right now, we are trending down. The SPY is below the low from yesterday. Actually, what are we doing? What are we doing? All right, let me update the Discord quick. I did change swingers. All right. If you're in the Discord, I just did an update to swingers. That's kind of important, so you might want to check that out. Just a little bit of management. Come on. Come on. Get your boy out of the hole. I'm almost seeing all green. I'm almost seeing all green. That's what. Let's go. Let's go. We're getting there. All right. We hit 53, 54. Come on. All right, free trade. It is officially a free trade. I'm not going to go deeper in the hole on this. Come on. Come on. Oh, why is this not working? Why is this not working? Come on. We got to 50. No, if that bounces from there. My first fill was at 51. I moved it to 46 just to play the technicals. There was a low at 45. So I was like, okay, I'll front run that one. I was hoping on the puke of 50 that would fill me out. Come on. Come on. Don't. There we go. No. No, 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 no. Come on. Come on. Come on. Come on. No, don't do this to me. Don't do this to me. Shit. 48. I was at 46. Come on. That doesn't make me feel good at all. Come back down. Break it. 60. Come on, get below 65. Below 60, I don't think I have to sweat that much. Maybe I can move my wrist to this level. We did crack 80. See, right here, this line, it was just a low. All right, come on. We can do it, team. Focus. Focus. Come on. Come on. Come on. Come on. Oh, Ay caramba. Come on, come on, come on, market gods, market gods. 46, 46, 46, 46. Snake eyes, snake eyes, snake eyes. Come on. Fuck. Come on, snake eyes. Come on, snake eyes. Son of a bitch, no. Okay, come back down. Just take out 50. I get it. There's buyer. Actually, there's a lot of buyers at 40. So 41 maybe makes a bit more sense. But anyway, come on. All right, I closed out these TPT accounts because I already maxed them. No fucking way. No way. Off by one. No. Why does this happen to me? Is there any other person on this planet who gets so insanely fucked by the market every single goddamn day? Off by a tick? All right, like, who the fuck gets screwed this goddamn much by the market? Are you fucking kidding me? One fucking lousy tick right there. 46.25. Mine's at 4. Like, are you? It's a fucking joke, dude. It's rigged. It's fucking rigged. This is the biggest load of fucking bullshit. Insane. Fucking insane. One tick. This is such dog shit, dude. Yep. Why do I even do this? This is fucking dumb. Weird MNQ dipped to 140. It's a different contract. They can be off. They're not really off generally by that much, but like it's literally a different contract. It's a different market. It's not going to be tick perfect. Okay, maybe a rejection at 80 at this previous support. Maybe support turns into reason. Like, what am I even going for at this point? Now this is just pure frustration. Come on. I need this higher high to be a fluke. If we can crack 55, I'm probably looking pretty good. But see how lower highs, lower lows? We're starting to see a higher high. Maybe this is a higher low. Like, you just don't know. And I have to pick. To be clear, I'm taking on no risk. Okay, like that's the first thing I should say is when you're in a dumb situation of being in the red, at least stop digging. I did take off all risks, like number one. And now it's just saying, okay, like how lucky or unlucky can I possibly be? And apparently my unlucky ability is max fucking level. One tick. As in, you could not be closer without getting a fill. Dude, fucking no way, dude. Oh my God. This is fucking insane. This is uncanny of how unlucky you can fucking possibly be in a day. I just like, what's even the fucking point of this? It's so goddamn frustrating. Come on, I need this to fail at 200 and not actually be a buyer's breakout. If it fails, as in if we come below 77, I can actually move my risk to maybe like 205, 206, something like that. At least it would guarantee some money for my efforts here. But this is not looking good, team. Come on, get back below. What was this pump? From 160. Nope, it's fucking coming for me. Unbelievable. Like truly insane. Matt, so what contract are you in right now? Dude, ask someone in chat. Do you not see, like, dude, read the fucking room. Don't ask me. Literally, I'm witnessing one of the worst fucking goddamn bad beats, and you're asking a novice question, which is fine. We all have to start somewhere. Don't fucking ask me, dude. Like, goddamn, read the fucking room, man. Come on. This is so degenerate. Fucking vomit. Vomit back down. Come on. All right. Where the fuck was that VWAP level? That dumbass VWAP level? No. Where is it? Dude, I need to go from being incredibly unlucky to incredibly lucky. I just need this to like not tag anything and just fail. We need to conservation of pure luck, the most unlucky to the most lucky. Like, let's see if we can hold it. Come on, go, fucking go. No, not again. My cortisol levels cannot fucking handle this. Go, fucking go. You motherfucker, just fucking hit it. Ah, there we fucking go. Thank you, baby fucking Jesus. He has risen, and so have my gains. On the third day, may there be tendies. Fucking finally. All right, what was that dumb question? What am I trading? It's not dumb. NQ. I am showing you a futures contract. NQ is the futures contract for the NASDAQ. So the NASDAQ is NDX. This is the actual index. The ETF to trade the NASDAQ, which you can trade the NASDAQ, is QQQ. Or you could trade it on the futures market with the NQ contract. So this is the futures market. This is the equities market. This is the equity / indices, and then obviously you could trade options on NDX. You could trade options on QQQ. You could trade options on the NQ futures contract. I'm straight up trading the NQ futures contract, which is the futures contract for the NASDAQ 100. Thank you. Someone said change your stop size to 1. Thank you. Thank you for that lovely reminder. Okay, so these ones, they matter, but they don't matter. These are just take profit evals. I like to pass them just so I have some in a queue to trade them on pro when I blow out the pro accounts. So that was me just maxing out the 50% on one day. And then obviously other than that, my realized P&L is still in the red, but if I were to close out right now, I would be in the green on the day. And actually, I should probably figure that out of where my break even is. I'm down 1,200, which is what, 60 points. So that's like 160. I can move my stop to 160, and this is roughly my break even on the accounts. Obviously, my break even on the trades up here, but I took trades earlier today that were fucking idiotic. So I could move my stop to 160, and that would at least bring my account back to break even if it were to get hit. But the question is, do I think we're going to have a legitimate breakdown today? And the answer to that is I have no fucking clue. No one knows what's going on. It's nothing but whipsaw bullshit. So it's a game of just risk reward. It really, really is. But I actually like that. I should move it there because it would be stupid not to. Okay. So in the worst case scenario, I'm guaranteeing myself off the second contract here, 1,255, which would cover my current losses. So if my stop gets hit, my accounts are break even on the day. Matt, how do you prevent this from happening in future using some code? How do I prevent what? Being dumb? I have no idea, dude. If you could come up with a magical, mystical pill to stop me from being dumb, I will give you all of my money. Matt, on MNQ, it reached 24,139. Okay. It's a different contract. It's a different market. Obviously, it's never going to get that far away from each other because they are like measuring the same thing. But it can be off by like just people might have different market orders or limit orders. It could be off by a tick or two. That's fine. Okay. I was down 2.7, 2.8K, which brings up the fair question. Should I just end my misery today? I could take out 1.5K and just end it. Maybe that's the right move. I mean, Lady Luck has not been on my side. I'm wondering if I just lock in here. I made 1.5K yesterday, make another 1.5 today. That's good. It's not exactly where I want the accounts to be at, but it's growth. Once again, I can now be more casual about this and easier because my stop is already at break even. As in, the worst case situation for me is the accounts are at zero. I was in the hole, 2.7K per account. I got myself out of the hole, and now the question is okay, like where the fuck to go? Maybe I move it down because if I move it to 110. So using 100 as a blocker, I can move it to 110, and that would guarantee $1,000 per account. That's not a bad thought. I'm just looking at this recent spike here at 10:01, and so maybe we still vomit, but just in case there's a 10 a.m. reversal, that's not a bad thought. It's not a bad thought. 110. I'm looking at this high right here at 10:02. That guarantees $1,000 per account, guarantees going green on the day, and still gives me a fighting chance just in case it does legit vomit from here. Mag 7 trending down. There are buyers at 24,081 is where there are currently buyers at. I'm looking at Bookmap. So that is the support. Yeah. Okay, what is this? All right, yeah, so this guarantees about 1,000 per account. Yeah, about roughly 1,000 per account, and we would have to take out this high and that high. That's probably at this point, especially based on the day that I'm having, that's probably tactically the right move. We're somehow turning lemons into lemonade here. It gives me a shot if there is a vomit below 80, cool, I'm involved, and maybe I could take profits at 50, or maybe I could even go to like 24,005 or something like that. And then if there is just a strong bounce, because I do see buyers once again right at 80, if there's a strong bounce, well, I at least made 1,000 per account. Maybe it'll get taken out. Maybe I'm on the right side of history here. I don't know. Okay. The max I want to go for is 3K per account. We're getting into the territory where I have to consider what my max is based on the consistency rules. And what would that be? Okay, my max that I want to make today is 3K. So 4,250 divided by 20, 212 points. Okay. So the max I want to go for today is 410, which is actually kind of a nice level because it's front running the key level. So even if we get the key psychological level of 24,000 flat, it's kind of nice. So on the trade, it would be a 4.2K gain. And then on my accounts, that would put them all at roughly up 3K on the day, which is not a bad deal. And obviously, I have already locked in the 4.5 on the take profits, which I actually need to trade them a little bit, lose a little bit money. I don't want any of these to be above 4,500. So I'm going to lose a little bit of money on these later today. I want them all just a hair below 4,500. But anyway, with all of that in mind, the most I want to go for today is 3K. Once again, that rule is just because of the consistency rules. And here we go. Come on. Come on. Let's go for it. Let's go for it. All right. Do I hear 410? Do I hear 410? Come on, dude. Imagine if this hits 410.25 like it did before. Come on. Your boy's just looking for 3K on every account. Hopefully I did the math right. Come on. Come on. Give me that. Give me that Trump dump. Give me that Trump dump. Let's go. Give me that Trump dump. Come on, brother. Come on, brother. Come on. Give me that Trump dump. Don't do this. Don't do this to me, Tony. Tony, how long have we known each other? I fucking hate trading. Who does this happen to this often? Like, seriously. Who the fuck does this happen to every single goddamn trading day? No one is as good at almost getting their fill as me. If there were a fucking Olympic challenge for almost getting your money and then the market reversing, folks, use this to your advantage. Wherever you see my profits, fade it a point above and you will have the best trade ever. Oh my God, a second time? I'm going to fucking lose my... There we go. Didn't question it for a second. Oh, buddy. Happy Tuesday. Happy Tuesday. Money Tuesday. Didn't question it for a second. I'm so fucking rich. I'm the best goddamn trader in the world. Warren Buffett is a washed up piece of shit. He quit trading because of me. No one can do what I do because I'm the best trader in all the land. I am so goddamn good at this. This is so easy for me. This is so fucking easy for me. And before you ask, Matt, how do you do this? Matt, please teach me. Right here. I already pre-filmed a video that's going to explain to you folks how I learn what I do. Right there. I got Ben Stiller to do that for me. Oh, there's no sound?
Yeah, it was an intense experience. You know, I just did the work. Watched a lot of retarded people. Spent time with them, observed them. Watched all the retarded stuff they did.
That's it. That's how I did it. That's the secret. Where's Steven? Steven had questions about the contract. That's how I did it. Right there. Write that down. Write down every single sentence of it. But I hired Ben Stiller to play the part of like how I did all of this. That's It's right there. I just learned from retarded people. Pretty much. Steven's like, I wrote that down. Steven, I like you. I think you're on a very good first step to being a successful trader. Actually, for your homework tonight, watch this entire movie. It has a lot to do with trading. A lot to do with trading. All right. Now we can all chill out. I know some of us were spun up. I'm not going to say who, but I know some of us were feeling pretty tense at certain points in that morning session. So now we can all take a little bit of a breather. We can all take a little, I'm not going to say who. I don't think maybe all of us in here are proud of what they said or how they acted. You guys didn't hear the music I was playing that entire time. I was playing shit like this.
You getting mad? I'm getting rich. You getting mad? I'm getting rich.
I was playing that. I was playing this.
Here comes the money.
We were playing a lot. I was playing this.
Wall Street, 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 Wall Street. Now my stock rising, got the eyes on me. Wall Street.
But you guys missed all that because of my fault. So I'm crushing. Hang on. Beef. Actually, I want to kind of break some of this down. If you guys could just for 1 second, let me take off the character of being an asshole and let me see how much money we actually made. And then I kind of want to break down this trade for you because I think this is going to be helpful. So hang on 1 quick second. Let's see how much money your boy made. Let's see it. Let's see it. Let's see it. Hang on. And then I promise right after I explain it and break it all down, then we can go back to being an asshole, put on that character. What's the total P&L? Let's see how much money we made. Let's see. Get to work, little AI robot. Do your worst. Come on. Give me the money. Give me the money. Give me the money. Money. Give me that money. 65,000. Not a bad day. To clarify, the take profits are evals. The 7 PVs are funded FFNs and the LTMs are funded legends. So I'm trading on 10 funded accounts and 10 evals. So I'm trading on 40 accounts. Half are funded, half are evals. So basically you could argue that half of this money really matters, about 33,000, because 33,000 is on real funded accounts. The other 33,000 is in an effort to pass the evals on Tradeify and on Take Profit. So that's this kind of rough split there. Like I said, really, really rough. But once again, half is funded. It's not all funded money. It's not like I can go take out that 65,000 right now and go gamble with it. I could almost take out, I suppose, almost half. I'm very, very close to getting another payout on FFN here. How much more do I need? I had 3K, 3, 6, 7.5. I think if I make another 1.5K on these ones, I can get another 10K payout. On the legends, I need to get up to 160,000. The Tradeifys are evals that are about to pass. The Tradeifys, I just need to get to 159. So I have $900 more to go. And on the take profits, I have another 4.5K to go. Okay, I'm done with futures trading today. There's no advantage for me to continue trading. Obviously, I'm going to keep trading options, but my options bot has not fired yet. So very quickly, just to break this all down for you guys, what did I see? What did I not see? Let me break down the trade, and then as I promise you, we can go back to being an asshole to each other. So this is important context. I was already trading this morning. I was trying to trade with trend right here. All these little arrows, that's me trading. I was trying to catch this. It popped up. I tried to go short. It was looking good. There was a random news announcement. It knocked me out. Okay, it popped again. I tried to go short again. I tried to play it. Nope, another random announcement. It knocked me out. I saw weakness in here. Tried to short. Nope, knocked me out. Went short again right there. I was like, okay, so this whole time I was going short. Why was I going short? It's because it was with trend. I am a trend following trader. Maybe you're mean reverting. That's fine. You can make money that way. I'm just explaining how I did it. So all these little pink arrows are me going short and getting unlucky. I was up money, it knocked me out for break even. Went short again, got unlucky, knocked me out. Went short, actually lost money. Went short, actually lost money with crazy slippage. These final 2 trades, break even. So I traded 4 times. Trade 3, trade 4 were supposed to be break even, but it was not looking good. And I think I started off the day maybe down 1.2K. So as of market open right here, I was down 1.2. So 2 losing trades, 2 break-even trades. The losses should have been around 700, 600, but because the slippage, it grew. And then right here, I took this short. You guys, look at, I literally got top ticked out. I wouldn't have even had to be a degenerate at 940. And this loss here, I was short at 936 and I got knocked out, top ticked the exit, the worst possible. And then I was forced back into the position because Icarus fired once again. But anyway, you might be asking yourself, Matt, why I think it more important than the entries, because remember, it's your exits that really matter and it's going to be your bias that really matters. So this was unfortunate. That was unfortunate. But overall, why was I feeling that bearish was the right direction? So let's say that you guys don't care about Icarus and the stats and the math and the figures. I can make it really simple. So maybe you haven't heard this before. Maybe you're new to the world of trading and you just need a little bit of help with okay, what should my bias be? Pretty fucking simple. So let's be fair and check the time. So the time was 940. 940, S&P 500. Here's 940, bearish. S&P 500, 940, bearish. And then obviously right here, 940 was within the first half hour, bearish. So 5 minute, 10 minute, 30 minute on the S&P 500, all bearish. Looking at the NASDAQ, 940 bearish, 940 bearish, 940 bearish. So the 5 minute, 10 minute, 30 minute, 5 minute, 10 minute, 30 minute, all of them, the S&P 500 and the NASDAQ in the short term, the 5, the 10, and the 30, all momentum was bearish, clearly, evidently. So that's one thing that I'm going to check. The next thing I'm going to check is just price structure. Price structure, lower highs, lower lows. That is a bearish trend. Price structure. And when I say highs and lows, if you wanted, you could just look at the fractals. This posts the highs and the lows for you. That's a free indicator if you give a shit about it. But once again, I'm seeing lower highs. I'm seeing lower lows. I'm seeing lower highs. I'm seeing lower lows. That is a bearish trend. That is a bearish trend. Putting that together with bearish momentum. So we have a bearish trend. We have bearish momentum. And then the final sanity check. And remember, this was back at 940s when I got into this trade right here. So pretend the rest of this didn't happen. This is what I was seeing at that moment in time. None of this happened. I'm seeing a downward trend in the S&P 500. Looking at the Mag 7, clearly I was seeing a downward trend. Obviously, since then, the SPY has been doing some weird stuff. But at the point of the entry, I'm trying to clarify what I saw to tell me to be bearish at that moment in time. Bearish structure, lower highs, lower lows, S&P 500, NASDAQ. Momentum, bearish on the 5, 10, and 30 for S&P 500 and NASDAQ. And then looking at the options flow, bearish for the S&P 500 and also the, in this case, technically the Mag 7. That's where my bias came from. Okay, that's where the bias came from. And then how did I manage it? Well, you guys saw it. I was risking, you could see it here. Where was that bad beat? The bad beat was right here. I was risking, I suppose, VWAP, and unfortunately, I was actually risking right above it on this trade at 936. Look it, I got stopped out. I was risking this high at 931. Had I just bumped it up a couple points, maybe if I used literally a tick higher, and I would have not gotten filled. It filled me right here at 64. My stop was at 64. So that was unfortunate, but it was a VWAP rejection of session and of regular trading hours. So rejection. I re-entered because it knocked me out right here. Why? Because it failed and my bias was already bearish. So now we're getting into the nuances of entry. Rejected. I took that risk. My stop was back at that high. It vomited. I felt good. It bounced back up. I did not feel so good. I was underwater, but guess what? It got rejected at VWAP, and then I was able to ride it down. Why was my first fill here at 45? Well, if you look in the pre-market session, the low was 33 and all the bars seemingly were at 50. So I just kind of cut it in half and I did 46. So just kind of in between those two key levels. And then the vomit, I did take it out at 24,010. If I didn't have to worry about the consistency rules, I would have probably taken it out at 24,000 flat, just because it's such a key technical, psychological level. So I had to front run that by 10 points with it, which is an extra $200, but whatever, it is what it is. So that's the only way I would have changed it without the consistency rules, is maybe I would have gone to like 24,002 or 01. That's the only thing in this that I would have trained. So I started off the day in the hole 1.2K. I grew the hole to 2.7, and then just keeping my shit together and not freaking out whatsoever, I was able to ride what I identified as the trend to make $65,000. So that is in a nutshell what I saw. And also, just so you know, that type of breakdown and then more in depth is really kind of the major effort of the Goonie Trading Discord. So if you like that breakdown, but you want even more, or you have even follow-up questions or something like that, join Goonie Trading. You can trade with me. You can get mentored by me. You can trade with other traders who are attacking the market in a statistical manner. Great community for you guys to check out. Pinned to the top of chat in the description of the video, and you saw the results in real time. Not only was it just an easy trade, I was literally on my heels like it was a fight today, and yet we still got the green. And then, of course, if you want to trade in a low-risk manner, obviously trade with someone else's capital. Shout out to Apex, 90% off. You heard me right, 90. Use that code Goonie. With these types of movements, whether to the upside, the downside, this is a very, very easy day to pass those tests just because we have so much range. You basically have a 50-50 shot of being on the right side of range. So go to Apex, use that code Goonie, put it in when you're checking out to get 90% off whatever your favorite account is. I like the end of day 150K drawdown accounts. Those are my personal favorites, but obviously you should trade whatever you think is appropriate. How much money was out to make 65K? That's not how it works. I think you're maybe like, you have to know more. So this is kind of confusing. If a stock is trading at $654, you have to have $654 in your account. If an options premium is trading at $2, you have to have $200 in your account. Futures are different. Futures, there is a price to play, as in the price is not going up or down with this. Like as it goes up, you don't need 24,000 and then 88 and then 90. No. To be able to go long or short the contract, there's a same set price. So, and it doesn't matter if in that day, if we're going up or down, the price is set overall by like really the brokerages and the nominal value and also volatility. But there is a price to trade per contract that is not based directly on their underlying. So it's not like you need $24,109 and now 8. And then if it goes up to 20, it doesn't go up and down the way premium or a stock does. It can go up or down, and it does go up in terms of the contract, the cost to be able to trade one. And the main thing that's going to impact it is volatility. So if there's high volatility environments, the brokerages can like raise what it does. But it's so right now, what I'm trying to say is if you wanted to go long or short an NQ contract right now versus here, versus there, versus anywhere today, you would have to have the same amount of money in your account. It wouldn't go up or down with the intraday movement up and down the way premium works in the options market, the way stocks work. It's basically just like a cost to hold the contract, whether long or short. The swing, if you want to swing it overnight, it's a different cost than it is to day trade it. And these future margin rates, that's what it's referred to. They do change, and all the brokerages posted on their website of what the margin rate is for that day. So once again, think of it as the fee that you have to pay to either hold long or short. That is not directly, it's not specifically the underlying value. So like, I think right now to day trade an NQ contract, what's it, 3.2K is how much you have, the minimum you have to have in your account. It's maybe 3.8, something like that. The last time I checked, the S&P 500 is less if you're trading the ES contract. I want to say that's like 1.8K to be able to day trade it. And then, of course, this is the ES and the NQ contract. You could trade something that is a tenth of the size, so a tenth of the risk and the reward, which is called MNQ. So instead of a mini, it's a micro. Same thing with ES. Instead of ES, it's MES. And instead of a mini, it's a micro. So that's, once again, a tenth of the parent contract risk and reward. So because of that, obviously, you need a tenth of the money in your account to be able to trade it. So the question of how much did you put up, it's not how much did you really put in to make that money. It's kind of more so a better way to do it is where did you personally put your risk, because that's how much you were putting on the line. It's not, the risk isn't inherently how excuse me. The risk is not how much money did you need in your account to be able to trade it. That is the question with the equities market and the options market. Here, it's kind of where did you put your risk out or where did you blow your margin? So for me, I took the short position in the realm of 22 and I was risking 66. So I was taking on about 40 points of risk, which every point is $20. So I was taking on $800 of risk and I'm trading 20 accounts. So what's that? $16,000 is like probably the better mathematical way to think of it. If it goes down and the value you put up to get the contract, does it stop you out? Yeah, the brokerage will, like, it's a margin call. The brokerage can close you out. So let's say you have to have $30,000 in your account to be able to trade it. If your account drops below it, let's say your account has $31,000, the margin rate is $30,000, and the trade goes against you and it drops to 29. Yes, the brokerage can close you out. So I know that sounds a bit foreign, but that's just how this market works. And the margin rate, it does change. It doesn't change often. But I remember when I first started trading, the NQ contract, the margin rate was maybe 18,000 to be able to swing it overnight for a full NQ contract. And now I think it's like 35-ish. It's in somewhere in the 30s. Here, actually, we can look it up. Trade station futures margin. Okay, so when I first started trade, let me zoom in on this. Where is metals? Well, I just wanted NQ. Yeah. So, oh wow, to be able to short it overnight, you have to have your account value has to be at least $39,000, and to long it overnight, your account value has to be at least $40.5 thousand. When I first started trading, this was $18,000. But once again, that's to be able to swing it overnight. To day trade it, you have to have at least, your account value has to be worth at least 9.2K, which generally, like, they go to a tenth of it. So the intraday rate right now, it's 25%. That's because volatility is higher. So sometimes I see them lower it to 10%. This is dynamic. Sometimes it's 100%. If we have a crazy day, like an FOMC day or something like that, to be able to day trade it, they might make it the exact same value. That's up to the brokerage and how much risk they want to take on. So my point in illustrating this is the value can change. It's basically based on the underlying volatility and the underlying value of the thing that you're trading. But it doesn't move per day the way like a stock's price does. Like if you want to buy Tesla at 300, you have to have 300. If you want to buy Tesla at 400, you have to have 400. It doesn't move exactly like that. It does inherently change. Like I said, I started and it was 18,000 to swing overnight. Now it's anywhere from 39 to 40.5. So that it's obviously gone up, but that's because the overall market has gone up. And right now the volatility is a bit higher. But think about it this way. If you're trying to day trade NQ by yourself, the cost to play is 9.2K. If you want to hold the contract long, your account has to have at least 9.2K in it. If you want to hold a contract short for day trading, your account has to have at least 9.2K in it. The question was, if you fall below that, can you get margin called? Yeah, they'll just close out the position on you, and the brokerage does that. And it looks like initially to have the trade, you have to have 10K in your account, 10.1K in your account. So it's a little bit weird because equities don't work that way, options don't work that way. But as soon as you fire off a couple trades, you will get used to it. And I know that these numbers seem big, but once again, that's for the NQ contract, something that's a tenth of the size. Instead of every point being worth $20, obviously every point is only going to be worth a tenth of that, aka $2. So it's perfectly a tenth. To day trade it, instead of 9.2K, you need $922. To swing it overnight, instead of 40.5 thousand, you only need 4,000. So it's perfectly 1/10 of it because the contract is worth basically 10 MNQ equals 1 NQ is how you do it. That's another crazy thing that blows people's mind. So right now, if you were to trade the SPY and it goes from 654 to 655, great, you made $1. If you were to trade NQ and it goes from 91 to 92, that 1 point is actually $20 because the tick value is actually 5. The tick value is the smallest increment, and this moves in 0.25s. So it goes from 100 to 100.25 to 100.5 to 100.75 to 101. Every single tick is $5. So one full point, which is 4 ticks, is going to be 20. That's for NQ. On ES, if this were to go from 604 to 605, that's actually going to be $50 because the tick value, and once again, the tick is 0.25 to 0.5 to 0.75, is $12.50. So every tick it moves is $12.50 per contract on the ES. So obviously it's different. That's a whole nother wild thing in the world of futures is not every contract moves at the same financial value. If you look at something like oil, let me go to oil. Every single one, 0.47 to 0.48, right there, that went from 0.5 to 0.6. That's all $10. Every 0.01 is $10, which means when this goes from 116 to 117, that's $1,000. It's not $1. So every single futures contract has its own tick value and its own movement, obviously, its own margin. Like if we were to look at CL right now, I don't even know how much this is. To trade oil, you have to have, $33,000 in your account. Once again, there is mini, which is a tenth of the size. But look at this. The intraday trading rate, it's 100%. There's no special intraday trading rate. So if you want to trade it, you have to have 33K in your account. Whether day trading or swinging overnight, oil is the same, and that can change. So the rate, whether it's 100%, 50%, 25%, 10%, it does change on, it's the broker's decision. So these are all futures contracts. They're all, commodities versus equities, blah, blah, blah. But even though they're all futures, they have different tick values. They can have different trading hours. So if you look at something like NQ, that trades from 6 p.m. the night before to 5 p.m. the next day. It's the Globex session. It trades 23 hours out of the day. However, live cattle, let's see, I know this has a weird time, trading time. Live cattle, right here, it trades from 8:30 to 1:05. So just a weird time. So even that, if you're getting in the world of futures trading, if you want to trade futures, just be careful of assuming because you learn one thing for one contract that it's inherently true for the other ones. They can have different trading margin rates. They can have different trading, like the overall tick size. They can have different trading windows. They have different contract roles. Something like ES and NQ, you only have to update to the new contract every quarter, so basically every 3 months. But if you're trading something like oil, or if you're trading something like gold, wherever gold is, GC, this updates every single month. So even though they're all futures contracts, they have different margin rates, they have different symbols, they have different tick values, they have different roll periods. There is quite a bit of a difference in there across the board. So I'm not saying that. I hope no one's scared. I'm just trying to explain that it is all very, very different, and whichever one you choose to like learn about or trade or whatever, just make sure you're learning the nuances of that. So then obviously the logical question from here is, okay, like I want to learn that. What's the best way to learn it? I promise you, the best way to learn all of this is to start a paper trading account. Paper trading is not real trading. Like as in your orders are not hitting the market. You're not really taking on Investopedia. You're not taking on real risk, but you're also not going to get real gains. But I was just trying to show you the definition of paper trading. But start a paper trading account. That's the best way to do it. Paper trade, right here. Paper trade, a simulated trade that allows an investor to practice buying and selling without risking real money. You can paper trade futures. My first trade ever in the world of futures trading was a paper trading on gold. I just maxed out as many contracts as the paper account would allow me, and I just swung it overnight. And I woke up in the morning and I had paper gains of $300,000. And ever since then, it was dopamine right into my fucking brain. And I was like, dude, I got to do this. This is like what I got to fucking do. I got to figure this out. And once again, it was paper. It wasn't real. But the best way for you to learn those nuances is literally just start ripping it with a paper account. Don't risk anything. Just start, be like, fuck it. I don't know. Buy, sell, do this, do that, change this contract, just fuck around with it. There's no risk to you. The fastest way for you to possibly learn the nuances of this, the margin rates, the trading windows, the tick size, the rolls, just jump in. Just a leap of faith, jump in, do it riskless. Do not risk any money. Do it with a paper account. That is the fastest way you're going to start learning. And then when you're comfortable with it, that's when you then go to SIM-to-funded accounts. Once again, we're just leveling it up. So you go from no risk to a little bit of risk to potentially some reward. That's when you're going to use a SIM-to-funded account. Then when you master that, that's when you can then go to your own funded account. And then when you're feeling comfortable there, that's when you use both. You use paper trading to optimize your strategies to continually test day in and day out. You legitimately train your own funded account, and then you trade the SIM to funded accounts to get more money to put in your own funded account. So as you grow in your career, you're not necessarily forgetting about the other stuff. You just bring in something else. I have a paper account that I'm running systems on to learn more about the systems. I have my own funded account that I am funding with my payouts from these sim to funded accounts. You're basically just adding another brick on to the foundation that you're building out. So I know I just hit you guys with like a fire hose worth of fucking information. Questions? Did I lose anyone? Or did I say something that maybe didn't make the most sense or something like that? Very quickly, just so you know, Mag 7 bouncing a little bit, the S&P 500 also bouncing a little bit, and the bounce in options. We're also seeing a slight bounce in price. I'd be looking for this to be a lower high that fails. And honestly, maybe it's just, let me get rid of this. We don't need that anymore. Let me get rid of this. We don't need that anymore. Where was it? Yeah, it could be a failure at VWAP. It could be a failure at 50% IB, or it could be a failure at the other VWAP. But on a breakdown of this, see how we're making higher highs and higher lows. As you start to break down, I wouldn't mind that short risking a previous high at all. Wouldn't mind that trade, whatever. So anyway, sorry, I got a little bit off topic there. Any questions on the fire hose of information I just hit you with about futures? I know at first it can seem like, holy shit, that's crazy. I promise you, it's one of those things that when you start doing it, you're like, oh, this actually isn't bad at all. Options are actually a lot more complicated. So if you're sitting there and you're like, oh, I already get it. I get options and free futures are freaking you out and it seems difficult. No, it's not. It's just one of those things that once you do it once or twice, which the best way to do that is with a paper trading account, you're going to be like, oh, this is not a complicated thing at all. It's just a little weird because you're always paying the same value to be able to go to short or long, which is unlike any other market really. But once you get used to that aspect of it, once you learn a little bit about the trading windows, the tick size, basically once you walk around the block once or twice, you're going to get you're going to know what you need to know. You got to get a little lost to get a little found. Yeah. Best paper trading account. I actually like Ninja. So right here, this is a paper trading account, Sim 101. That's a paper trading account. I could do whatever I want on this, right here, Sim. If we want to go short, right here, Sim. Let me make sure I'm not accidentally paper trading anything. Sim, boom.
Order filled.
Whatever. You could do it like this. This is paper trading. It doesn't matter to me. I'm taking this short. You could argue it's a breakdown. We got rejected. Like whatever. So yeah, on Ninja, you like, and I kind of like Ninja because it's useful to get, I guess, familiarized with the platform if you choose to do sim to funded trading afterwards. Like you're already on Ninja. But then from there, on top of that, you can start to do build out your own trading strategies because they have a thing called Ninja Script, which allows you to program your own trading systems. But once again, I'm on the sim account. I just went, whatever, I'm trading 10 contracts. I don't like, it's just to fuck around and like learn about the buttons and the contracts and what does each point like really mean. And I'm on NQ, but I could switch up. I could go to oil. I could go to silver, but it's just right here. I'm on this contract sim. Maybe it works. Maybe it doesn't. Like I said, does not matter to me. Do you have to use Ninja for sim to funded? No, you don't have to. I guess you could directly use Trade8, and then if you wanted, you could hook up Trade8 to TradingView. That's a workaround, but Ninja's going to be your best option for sure. When did I start trading? I placed my first trade ever back in high school in 10th grade, so that was 2010. But I wasn't like trading then. I started trading binary options in 2013 pretty heavily, 2014 to start paying for school. And then I switched to penny stocks in 2016, 2017. And then I was also learning futures a little bit before that, in between binary options and penny stocks. And then I realized penny stocks fucking suck unless you have a big enough account to be able to go short. And then from them, I pivoted more heavily into futures, got sidetracked by the whole AMC GME thing, and now the world is a full circle. I would say I started taking trading seriously, like when it was an aspect of my everyday life in 2017 is probably like when I focused on it every single day. But it was an important part of my life starting in 2014, but I made my first trade ever in 2010. Matt, if you were to start a new position on SPY, would you go long or short? For what time frame? Like for day trading, for scalp trading, for what? So it's questions like that like you have to learn a little bit more about trading because as you learn more about trading, you're going to realize that question itself is nonsensical because what you're doing is hyper dependent on the time frame that you plan on trading. Day trading, obviously I would go short. Without a doubt, I would go short. How long would it take you? Well, first of all, dude, stop fucking spamming. I'm trying to answer your questions, but you're such a fucking asshole for spamming. So now I'm not going to answer it. I put up with it once. Like, why do people think spamming is going to get someone to answer it more like, be a fucking adult, dude. Like, Jesus Christ. And now I'm not going to answer it because I'm petty and I don't have to answer it. It's just like, don't fucking spam. Like, how fucking dumb are you? Matt, tell me what to do so I can make money. Yeah, basically just find the discipline in yourself to have good risk reward. Folks, I've said this a million times. I'm going to say it a million more. If you look at the data of all intraday trading time periods, the 1 minute, the 3 minute, the 5 minute, the 10 minute, the 15 minute, the 30 minute, if you backtest all of that data, you're going to very quickly realize that is a 50-50. Half the bar, almost perfectly 50-50. Half the bars are green, half the bars are red. The game of day trading is a 50-50 game. You have to accept that. Just the other day, I got into an argument with some sort of fucking retard. Where was this retard? I want to show you how stupid this fucking world is getting right here. This video should cost $3 trillion. The only ICT strategy that has a 98% win rate. Bookmark it, retweet it. Obviously, I shared my thoughts of, where was it? I was fighting with a lot of people yesterday. If you believe this, you're retarded. anyone who, and yet 2.2 thousand likes, 133,000 views. People like legitimately think in a 50-50 game, you can somehow have a 98% win rate. Okay. You want to know how you can have a 98% win rate? Fund your account with $1 million, go long an NQ contract every single day for 1 point. You're probably going to have a 98, 99% win rate. No risk. Risk the entire account. Fund your account with $1 million, go for 1 point a day, go for 2 points a day. Yeah, that'll probably work. You're probably going to have a 99, 98% win rate. But for everyone else, I watched it. I'm so fucking dumbfounded that people like this. 2.2 thousand likes. The ICT community is like such a special type of retarded that I just don't get it. I don't understand how people legitimately think it works when they're only losing money. Like, someone needs to explain that to me, but because like it's always this game of explanation. Like, I know I lost money, but I lost money because of blah, 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 blah. It's like, no, you lost money because it's a shitty fucking trading system. And there's thousands and thousands and thousands of people losing money with this alleged system. And then yet no one stops to question, maybe it just sucks. I just don't get it. The guy who that guy was broke until he started selling Kohrs. Yeah, he's never made money. Like, do you know how many times he's been exposed as a scammer? Do you know how many videos are out there? Like, they're all fucking dumb. And yet people fall for it every single day to the point, like, the proof is right here. No, that one. Well, no, this one right here. This one, this is for the ICT
Yeah, it was
traders.
an intense experience. You know, I just did the work. Watched a lot of retarded people. Spent time with them, observed them. Watched all the retarded stuff they did. Yeah, it was an intense experience.
How do I steal this? How do I... Can I just... There we go. Let's stir the pot today. Let's stir the pot. Anyway, what was I just showing you of how that, wherever it was, that video, the person, the fucking AI chick, dude, it's some fat, ugly dude who's like cosplaying as an anime girl telling you to trade ICT. It's just the definition of a sad fucking incel trying to get you to do some dumb shit. And it's just, dude, there is no ICT trader who is net profitable. That's it. That's it. Selling courses, selling indicators. Dude, if you want to sell courses and sell indicators, have at it. But make sure you're backed up by some sort of proof of profit. Some sort of proof of consistent profitability. Like, that's it. Not just, oh, I hit this trade. No. Proof of consistent profit. And from there, if you want to like teach people your ways, dude, have at it. But this idea of people saying, oh, I made money on this trade, now buy my fucking course because you did one thing right at one time in a dumb fucking paper account and you didn't even make money. What is going on? It's a fucking cult. Here, I'm going to tell you guys something. If you want to trade with me, if you want to learn from me, have at it. I think I have a lot of things to teach you. But I'm going to teach you 99% of what you need to know. Do you want to trade with me? Have at it. Do I have a service? Yes, I have. But you don't have to sign up for it. It does not matter. As a scalp trader, as a day trader, as a swing trader, as an investor, as a hedge fund manager, whatever. There is one commonality across all successful traders for all assets. It doesn't matter, stocks, options, any of that stuff. It's all just risk management. No one can tell you the future. What's the thing in Wolf of Wall Street where he's sitting, Leo's sitting down with McConaughey and he's like, yeah, it's good if we like make them money, right? Right? Isn't that what like we should be doing? And McConaughey says, no, No one can predict the market. And that's so true. That line is the most important line that like we should, as an active trader, take away from the market. No one knows what the fuck is going on. Just accept it. You are playing a 50-50 fucking game. The entire idea of this is the shotgun approach. It is take as many reasonable shots as you can, and if you are wrong, very rapidly admit you are wrong and move on with your life. And if you are right, say, oh, that's awesome, and see how right you can be. One of the metaphors I always use in here is that we're always going fishing. That's it. That like we're just going fishing. Like this idea of someone being able to predict where the market's going to go is honestly one of the most fucking dim-witted, retarded things that is currently alive and well in the world of retail trading. No one can predict shit. It is a game of basic mathematics. When you are right, can you be more right than when you are wrong? You're going to be right or wrong roughly 50-50 within the bounds of 10%, anywhere from 60-40. And if you're trying to escape that, good fucking luck. That's how often your hit rate is going to be. My hit rate, I think, is 55%. That's going to be the game. So how can you be net profitable in this game? And like I said, I've said this a million fucking times, but there's always new people in here. So I need to drill this into your heads. Let your winners run. And when you are wrong, and this is the important part, is admit you are wrong as quickly as you reasonably can. The biggest issue in the world of trading and the biggest issue in the world of losing traders is holding on to their losers for far too long. Like they sized up, they let it go, and it's just like way too big of a hit to their account that like mathematically you can't recover from it. And then when they're luckily right, they just take their profits way too early. That's going to be the biggest issue. Personally, I've never had issues with, I hold too long in both directions. I hold too long in my winners, so I have very, very big winners. And then I also, I try to stop myself from doing this, but also when I have losers, that's kind of my issue. It's like, I've never had the issues of getting out of winners early. I know many people have those issues. They hold on to losers too long and winners too short. I hold on to both too long, and that's beneficial to me when I'm trying to go for big winners because that's how you get big winners. But unfortunately, I have it on both sides, and I try to stop that. Like that's more of a discipline issue in myself. But the big reveal to trading, and like, yeah, of course I get into more detail into the Discord, but maybe the Discord's not for you. Maybe you don't want to spend money. Maybe you're like, yo, fuck all these influencers, fuck all these gurus. Dude, I'm right there with you. But before you go, the big secret is assume the game is 50-50. Assume the game is 50-50 and just get out of your losers quickly and hold on to your winners as long as you reasonably can. That's the giant secret. The most successful trader in the world, Jim Simons of Renaissance Technologies, $100 billion in profit, returned on average 35% per year, outpacing every single trader in existence. He was only right 50.75% of the time. The best trader in the world was not even right 51% of the time. And he's the dude who returned $100 billion in profits. And you're thinking that all of a sudden, you think the best trader only hitting 51% has the smartest people in the world, and then yet you actually believe there's a way to hit 98%? And I'm using the editorial you. I'm not like yelling at anyone individually in chat here. But 2.2 thousand people believe that. 3.8 thousand people fucking bookmarked this. What? Are you fucking crazy? The best trader in the world doesn't even get it right 51% of the time. And yet 3.8 thousand people are like, oh yeah, this is what I want. Like this person's retarded. It's an AI generated girl who's going to be some fat, pudgy fucking loser dude. I build profitable traders, grow brands, DM for promotions and partnerships. Are you fucking kidding me? Partner. What is this one? Blue Guardian. Yeah, it's just hawking some sort of affiliate bullshit. Like retarded fucking order blacks. Inverted. Oh my God. Did you not see the inverted fair value gap with the order black into the New York session with the PD array? Like these people are fucking scam artist losers. None of these people are traders. None of these people are traders. I can count on one hand the amount of people within this sim to funded space that are actual traders. Rips is a real trader from everything I can see. Ike, IKE, you maybe see him on Twitter. He's a real trader. Real Jay, I talked to him here in New York. I know he's a real trader. I've seen his accounts. Like, it's sad, but literally on like, it only takes one hand for me to count the legitimate actual traders in the sim to funded industry, and the rest of them, Nutty, he's a real trader. Rips is a real trader. Nutty is a real trader. Ike, Real J. I'm trying to think of who's a real trader and not just like a marketing scam artist. Meet Kevin's more of an investor. What about Max Options? I don't know. From what I've seen, he seems legit, but I'm not 100%. I haven't met him in person. I haven't seen his accounts. Wrench, but he's also not in this world. I'm talking about like people specifically in this world of sim to funded. Yeah, TJR, obviously a fucking scam artist. He's not a scam artist. He's a marketer. That's all they do is market. Look at, before when I was telling you about the sim accounts, yeah, you can get a sim account on Ninja. My sim trade is up 6K. And you can understand why, as like a teen, I got addicted to this shit, because I was like, wait a minute. I could have done something that made me 7K, and it would have only taken, I got into this trade at 1040, fast forward 16 minutes. Like, this is where it like flooded my brain with dopamine that this type of thing was possible. Since then, I learned how difficult it is to do this commonly. But at the moment, I was like, wait a minute. You're telling me I could click buttons and somehow make $6,000 in 15 minutes? I don't know who Trade Brigade is. I mean, you guys are asking me about a lot of people who I've just never heard of, or if I have heard of them, I just don't know enough of it. But I mean, there's so like ICT is a proven scam artist. Tory Trades, proven scam artists. Like, there's too much evidence out there of them paper trading, of only focusing on their quote unquote mentorship discords. Like, I don't think they're profitable traders. To be fair though, I think Tory Trade has posted yearly update videos, and I do think she actually does make a profit. ICT never makes a profit, and I promise you, any of the ICT influencer groups, they do not make money. Matt, did you learn from someone or self-taught? No, I read a shitload of books. All the books behind me are trading books. So I learned from people who are actually respected in the industry, not some sort of fucking influencer cuck. And then from there, it's just my background's in computer science and statistics. So it's just backtesting a lot. Like, what I don't get about the internet, and this, maybe you guys, like, this might be nuanced to me. I'm not really sure. But okay, here's what I would do. Where was my reply to that video? So this type of shit, the only ICT strategy that has a 98% win rate. So I would listen to it. I did listen to it. And then I'd say, okay, like, what is the strategy? Cool. I have the strategy. I'd go backtest it. I would import the data myself. I would backtest it. And then I'd be like, well, that's a fucking lie. And in fact, not only is it not profitable, but it's actually a net losing strategy. So I think it's kind of one of those things, not even trust but verify. I would say be curious but verify. Just because you saw something on the internet, it's probably not true. There are very, very few people who are just going to be giving away the golden goose trading strategy. So maybe someone else's thoughts or opinions like spark your thoughts and be like, oh, that's kind of interesting. Let's backtest it. And then just see, people hear things on the internet and they're like, oh, I saw it and I saw some drawing and it worked one time, so it must work all the time. That's not true at all. You can find so many examples and counter examples in the world of trading that it's insane. You should be curious, but verify. So even with me, apply that to me. If I tell you something, if I say, hey, whatever, the 1 minute data is 50-50, you could say, oh, that's interesting. And then go back test it. It's not hard. If you have no coding background, you no longer have an excuse. AI makes it so comically simple. So literally even what I'm saying, apply it to me. If you're like, oh, Matt said this, I wonder if it's true or not. That's interesting. Be curious about it, but go verify it. Like right there, go verify it. I try to make it that everything when I'm like not in asshole mode and I'm trying to actually teach you guys something about the market. I try to back it all up with like very like just clear, verifiable stats about the market. When we talk about gap fills, the Piper strategy, which I think Piper is actually about to fire if we get this IB breakdown, that type of shit, you can backtest. Like the data's out there. Don't be fucking lazy about it. Like at a certain point, I feel for people because when you're first joining the world of trading, you don't know what you don't know. Like that just happens. But from there, after a certain amount of period, like a certain period of time, if you're still trusting motherfuckers who clearly don't know what they're talking about, if you're not backtesting, if you're not like putting in like real, like mathematical, rigorous research into your bets with your hard-earned money, you're just asking for disaster. You really are. But yet, 3.8 thousand, like this is the dumbest shit ever. This feels illegal to be out here for free. Like this person, it's just marketing. It's just trying to market absolute fucking dog shit.
At my 9:30 opening range,
Just some dude with an AI generated girl. So
The discovery.
just regurgitating other people's bullshit. I don't, it blows my mind. I fucking hate the world of retail trading because so many people are getting so duped every single fucking day. It makes me sick. And then yet we all get confused where we hear these stats of like 95% of traders lose. Yeah, 95% of fucking traders lose because they're learning from dipshits, dude. It's sad, honestly. It's legitimately sad. Need discernment in the space. You need to have the ability to figure out all you need to learn and read price action, not find some teach, blah, blah, inner circle. Well, but the way you discern is just go prove it to yourself. You don't prove it to yourself by saying, hey, this trade worked one time. Hey, it didn't work, blah, blah, blah. Literally just go back test it. Be like, if I traded this strategy for the past 3 years, for the past 5 years, would I be up or down? That's it. Like, it's rather fucking basic. Like, you don't have to do some sort of big brain thing of like, oh, I'm going to hand check every single one. No. If you see someone point out a trade, like right now, I could say, yeah, every single time you hit 24,082.75, you should go short. My proof to that is that I am now up $19,000. That doesn't make it a good trading strategy. You would literally just go back test that. Be like, okay, maybe it is. Let's go see what happened historically if you went short 24,083 every single fucking time. Just because people have found success with it one time, that does not mean it's net profitable. And social media somehow skews the mind of even the most informed people. Right there.
Order filled.
Right there. That's proof. I just made $20,000, and that is proof that every single time you hit 24,083, you should go short. And my proof is that I just did it one time and it works. Right there. Boom. Someone disagree with me on that. I locked in $20,000 on that, and that means that you should buy my course. Like, that's how fucking dumb people are in this world, is they see things work one goddamn time and they're like, take my money, take my money, take my money, take my money. It's the dumbest shit ever. But whatever. Some of you are going to sink and others of you are going to swim. For those of you who are going to swim, let's do this together. And for those of you who are going to sink, well, I very much hope that you don't bet that much of your money. So good luck with that. Good luck with that. Shout out to Apex. Remember, if you want to, with minimal risk, test out your trading strategy, 90% off. Use that code Goonie, Goonie, 90% off And I wish you the best of luck with that. I'm going to go hang out in the Discord and most likely rant about how stupid people are who follow ICT and Tory Trades and Rocket Scooter and all these other fucking dipshit scam artists. And I guess other than that, I wish you luck. I wish you the best of luck. We'll be posting content later on today and then streaming once again tomorrow morning. I hope you guys crush it. Peace.